Thank you so much for joining us. I'm Marlon Bowling with you, and I'm pleased to welcome to the show Mr. Brian Hoops, and he is with Midwest Market Solutions in Springfield, Missouri. Brian, we had a bit of a turnaround rally here in the grain markets after kind of a weak open this morning, and we had some overnight export sales to talk about. It's been kind of lacking here for about 3 weeks, and we had a sale of corn that was announced overnight. It was corn to Japan, not China. It was 175,000 tons of corn that was sold to Japan this time around. It looks like it was for the 2021 and 2022 marketing year. Excuse me. So that would be the upcoming crop, correct?
Good to see that we saw another sale of corn here. It's been badly needed. That's what the market has been asking for, is some of these sales to be completed here. We look at our shipment numbers that came out yesterday, and those are real solid, especially for soybeans, where we only need to be averaging just a few million bushels each week to hit the current USDA forecast, and we're still doing, in the 30s. These are some tremendous numbers, and at some point, the USDA is going to have to account for that. The crush number that came out yesterday is another one that the USDA is going to have to account for. And so I think as we go into the supply and demand report that's out a week from today, on the next Tuesday, that report's going to try and show us probably tightening balance sheets, and the market's going to be anticipating tightening balance sheets and higher prices to come because of the strong exports that we've had, as well as our shipment pace that we're on. And then you look at the crush numbers that are coming out, record large for the month of January that was released yesterday afternoon. That argues that the crush also should be increased, and that'll tighten up our ending stocks even further.
Let's look at our current prices right now, and we did have about a 10-minute sell-off after the open in the corn and soybeans. Then they rallied for basically, about 45 minutes or half an hour, something like that. Then they sold off a second time. Now they're starting to rebound again, and we have the May corn now 6 cents higher at 5.44, make it 5 3/4 higher now, but we're still about 12.5 cents off of our earlier low. And now we're within just a penny of our high of the day. Even new crop December is gaining 4 3/4 cents now at 4.73.5. That's within a penny of its high of the day. In that soybean market right now, you have the May contract 9.5 cents higher at $14.75. And we have September gaining 5 1/4 cents as we speak here right now. The new crop November contract that has also been trading higher as well. Now, let's take a look at our wheat market here, and we'll see what's going on in Chicago wheat. We have the May contract 12.5 higher at 6.62 3/4. In the Kansas City market now, you have the May contract 9 1/4 higher. We're at 6.32.5, and that would be about 13 cents, believe it or not, off of its earlier low. And in the spring wheat trade, we had the May contract 8 3/4 higher at 6.42 1/4. That would be about 2.5 cents from our high of the day so far today. Well, you have to wonder if the cotton turned around as well, and it has not. We are still lower on the cotton, with May down 127 points, and it's all the way down to 90.30 cents per pound. New crop December down 119 points right now at 85.60. So we'll pause right here. We'll come back and we'll talk more with Brian Hoops, and we'll discuss our livestock trade, see what's going on, if anything, out in the country this morning when we come back. Let's go back to Brian Hoops of Midwest Market Solutions, and we'll talk a little livestock market action today. Brian, I was reading on the wire earlier this morning where it looks like we're starting to get some early asking prices this week, and maybe they're asking about 116, but given the market action we've seen in the futures, is that going to be kind of a stretch?
Yeah, I think it's going to be. It's going to be tough. We've already have April futures well above that area, and the cash trade last couple of weeks has been right in that 114 region, and that's brought the April futures down. It's assumed the leadership position over February. It's already at 119 roughly, so you're looking at $5 premium. It's going to be hard, I think, to get the cash up to that 116, especially with show lists coming larger than last week, about 15,000 head larger than a week ago. And that's what the trade has been very nervous about, is the fact that these numbers are appearing to increase into late March and early April before they start to tighten up. And that has what drug the April futures off of their session highs and their contract highs just made just a few weeks ago.
All right, let's take a look at the feeder cattle market today. And with our quotes provided by Bar Chart on the feeders, we have the April contract $1.72 lower at 139.40. So that would put us $1.25 off of our earlier high this morning. The May contract $1.90 weaker at 142 even. That's over $1.50 now off of its earlier high this morning. And then on the lean hogs, this is the one that we've been talking about here all morning long, where it's been surging and surging and surging and just on almost a parabolic move upward here lately. But boy, they're taking back a lot of it today. April lean hogs down $2.30 at 85.42. May down $1.95 at 87.62 per hundredweight. Obviously, the nearbys leading the charge to the downside, and that would seem to be a little more ominous sign when you have that much on the nearbys pushing it down.
That's right. Yeah, we had contract highs recently, and bull spreading led the market higher. Now we see a lot of bear spreads pushing this market lower. They're really weighing on the April contract. Possibly a top has been in place for the April hog futures, and now we're unwinding a lot of those spreads that pushed us into those contract highs, with heavy bear spread trade being noted.
Do you look at this as a correction, though?
Yeah, I think this is probably at least a correction, maybe even a top in the April hogs. I think they probably got a little bit too rich for where they really needed to be. They were well over 85 and almost into the $90 range, and that is pretty unusual. Seasonally, they should actually be working their way lower, not higher this time of year.
Interesting stuff. And as you mentioned, that spread, the April around $85. You go out to July, and they had been up close to 95. Now they're at 93.60. So still about a little over an $8 spread between the nearby and that July contract. Have to keep an eye on that. Thank you, Brian, for the time. Appreciate it, sir. Brian Hoops of Midwest Market Solutions in Springfield, Missouri, joining us today. Janet?